You've probably heard about this thing called a credit score, right? This mysterious three-digit number that seems to have a say in your whole financial life. Well, in this explainer, we're going to pull back the curtain and make it super simple. What it is, why it's so important, and how you can build a great one.
But first, just think about this for a second. What if there was just one single number that could be the key to unlocking your dream home, or that new car you've been eyeing, or even just your next phone plan? A number that could literally save you thousands of dollars. Well, that number is real. It's your credit score. And yeah, it might seem kind of complex, but trust me, it's one of the most powerful tools you have for shaping your financial future.
Okay, so let's get right into it. What is this number really? What's behind all the hype? So, at its most basic, a credit score is just a three-digit number. It usually goes from 300 on the low end all the way up to 850, which is perfect. And it really only has one job: to predict how likely you are to pay back money you've borrowed. The higher the score, the more lenders think, yep, this person's a safe bet. Honestly, the best way to think about it is as your financial trust score. It's like a quick, at-a-glance summary for banks and lenders that tells them whether you've got a good track record of handling your money responsibly. Okay, so it's a trust score. Big deal, right? I mean, what does it actually do in the real world? Why should you even care? Well, because this little number has a massive impact on your life.
And its influence is huge. We're talking about the big ticket items for sure, like getting approved for a car loan or, the mortgage for your first house. But it also trickles down into things you might not even think about, like whether a landlord will rent you an apartment or if you can get a cell phone plan without a big deposit. And probably the most important part, it decides the interest rates you'll pay on pretty much everything. And the difference is just night and day. With a high score, lenders see you as low risk. That means you get approved for loans more easily, and you get offered lower interest rates that save you actual money. I mean, think about it. On a $25,000 car loan, a good score versus a poor one could mean paying 5% interest or 15%. That's a difference of over $7,000 out of your pocket for the same car.
Now, I know this can all sound a little intimidating, but here's the really good news. Your score isn't some random grade. It's actually calculated using a very specific formula. So let's pull back that curtain and see what it's made of.
See? It's not magic, it's just math. There are 5 main ingredients in this recipe, but 2 of them are the real heavy hitters. First up, taking up a whopping 35% of your score is your payment history. It's simple. Do you pay your bills on time? Right behind it at 30% is amounts owed. Basically, how much of your available credit are you actually using? Together, that's 2/3 of your entire score. The rest is made up of smaller pieces. How long you've had credit? That's 15%. How much new credit you've applied for recently? That's 10%. And your credit mix, having different types of accounts. That's the final 10%.
So, the big takeaway here is crystal clear. If you focus on just one thing, make it your payment history. Nothing matters more. A single late payment can seriously ding your score. So paying your bills on time every time is the absolute #1 golden rule of good credit.
Okay, so we know what the score is, we know how it's calculated. Now let's get to the most important part. How do you actually build it? Well, this is where something you might think of as dangerous, a credit card, can actually become your best friend. That's right. When you use a credit card responsibly, it's one of the best and fastest ways to build a positive credit history. Every single time you make a payment on time, it's like a little gold star that gets reported to the credit bureaus, proving you're a borrower people can trust.
And here's a super simple, powerful game plan. Step 1, use your card for small, regular things like gas or your morning coffee just to show you're using it consistently. Step 2, pay your bill on time, every single month. This one is absolutely non-negotiable. And step 3, keep your balance low. A fantastic rule of thumb is to never use more than 30% of your total credit limit. That's it. You do those 3 things, and you are building the foundation for a fantastic score.
So now you have the playbook. But it's really important to remember that this isn't an overnight fix. Building good credit is a journey. So let's take a look at the road ahead. Building a great score takes time and patience. It really is a marathon, not a sprint. In your first year, your whole goal is just to establish that positive payment history, no missed payments. By year 3, you're starting to show a pattern of consistent, responsible behavior. And once you get past 5 years of good habits, you're on your way to building a truly excellent long-term score that will open all sorts of doors. And that brings us to the single most important thing I want you to walk away with today. Your credit score is in your control.
It's not some mysterious number that just happens to you. It's a direct reflection of your habits, and you are the one who has the power to shape those habits. By understanding how it all works and just taking these small, consistent steps, you can build a score that does more than just look good on paper. It makes your financial goals possible. Your credit journey really does start right now. So, where is it going to take you?